day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday the 16th. As you can see, the board just closed. We missed it by a fraction there, but it's a new set of all-time highs in the stock market. Why? Well, as they're clearing the boards, let me give you my thoughts on it, because I said this on Fox Business TV today. I think that the beginning of the impeachment trial, now that you've got the U.S.-Chinese deal signed, the Senate passed today the USMCA deal, which certainly helped the stock market, because that's even a bigger deal than the Chinese deal. But I think the biggest event, whether the president gets impeached or not, I'm certainly not on the jury, is that it began. It's not hanging over us right now. Now, the thing I always get scared about is here we are at mid-month, January, and the stock market's up so much. What's it going to do for an encore is what bothers me. We're going to have 2 weeks probably of trial. It'll carry us from next Tuesday right on through the end of the month probably, and we'll get a verdict. Assuming the president is found not impeached, that's not a headwind for the market. If he's impeached, game changes on you. Then we've got who's going to be the next president. The whole game changes. So that, I think the market today said, okay, the odds still favor the Senate's pro-president. That's the reality of how people are thinking. And that began. And I think when you begin an event, it's like, thank God that's getting behind me. When we look at the market, you can see you're up 51%. 51 points rather. I wish it was 51%. Up 1.59%. The brain's faster than the mouth. And the market running to the upside. That's a 2% or 1.5% gain this week alone. If I come back to last week, this is a weekly close, you're up 0.9, and that week ended January 10th, and the week of the 3rd ended up down a little. So we've already added on a closing basis for the year about 2.4% in the market. Pretty good return so far. When we take a look at this chart, this is called a breakout to the upside, the euphoric breakout. How long it lasts, do we get Friday profit taking? You got to have this all in the back of your mind. When we look at the price action, you went, and this is what I call a vertical price rise. If you're trying to catch it, you had to be here that day, otherwise the market got away from you. And again, it challenged the 18-day average, found its support against it. It seems to be that the breaks last a day or two, get down to that number, and that seems to be the number it's finding support. Nothing lasts forever, but you have to recognize what's at work right now. I also look at resistance, and this market keeps hitting, backing off, hitting, backing off the upper Bollinger Band, just pushing it out in a very orderly manner. We're also looking at the market with an embedded reading. Embedded means you've converted the market from overbought into locked in. In other words, locked in, I use the word embedded, it sounds better to me, that's all. And that means both the K and the D numbers, the red and the blue, that make up this momentum oscillator are locked into a bullish pattern. When the red closes under 80, I'll look for a correction, just the way you got it there, just the way you had it back here. That does not mean I turn bearish. I'm looking for a correction. Very big difference. In the NASDAQ, my eye goes first to the embedded reading. It's the most powerful tool I know on these charts. Higher lows, higher highs. Now let me make a statement to you. You know, I've begun my SPDR ETF videos. So I'm doing the QQQ, the DIA, the SPY. They're all there. I'm going to keep them separate from these videos. So I'm going to have very shortly an end of the day SPDR ETF for this type of general talking. I'm already and have been posting all week long now my SPDR ETF video for my subscribers, and it has a lot more data in it. I'm very specific. Buy here, sell there. This is what I want you to do, blah, blah. Much more than here. If you haven't seen what I'm doing, and most of you have not, all you need to do is go to our website under free trials, click it, sign up for it, and we'll give it to you, no charge. I would like you to tell me what you think of it, things of that nature. So here we are. We back off. We go to the upper Bollinger Band. That's typical of a bull market, pushing itself out. What about the Dow? Same thing. Now, have we embedded? We hadn't yesterday, but both numbers over 80 today, both over 80 yesterday, day before. Day before it wasn't. This is the third day in a row, so I now have it embedded. So until the red line closes back under 80, where am I? I'm a bull. And I'm looking at this has a better pattern. It's got the higher lows, higher highs. It gets ahead of itself on the upper Bollinger Band. The one thing I tell you is no, you won't hear me telling you to buy over Bollinger Bands. I don't know that I've ever done that. May have earlier when I learned about them, but as I really started diving into them and really becoming a teacher of it, changed my opinion. Is this a sign of weakness? Absolutely not. But market I consider ahead of itself when it's over that. What about the Russell? Little difference. Now let me explain this one to you. Do you see the sideways action in the narrow bands? There's an art to using Bollinger Bands. And one of the things I've learned over the years is depending on how wide, what is wide on that chart, because each chart's a little different, obviously, what is narrow? This is narrow. When the market tries to first break out of narrow, for calling this a base as an example, or break out to the downside, calling it a top, it is common that if it's to the upside, and you'll typically get overbought going into that, that the market will stay overbought. This is what the market looked like yesterday. This is what it's doing today. So far, the bulls have grabbed control. Yes, it's overbought. It's over that. But it looks like a breakout on the chart at this point. You'd have to come back into the 1652 under that number to get me thinking different, and supports the 18-day average. And no, I don't tell people to buy overbought markets or over Bollinger Bands. In the VIX, I'm a broken record. I still think the pros are going to write puts if you hit the lower Bollinger Band, looking for the upper 18-day average of closes, the red line. We'll see if I'm right or wrong. In the bond market, you hit the upper band. What happens against upper band, especially the first challenge? This is how the market looked on Tuesday. This is yesterday. I think pros are taking some money off the table. Market down today, 13, added to the yield again. The yield's climbing, and same thing in the 10-year. You just missed that number in that. Momentum is flat here. Trend is up. Nothing's turned down in these markets, but they're getting a little bit ahead in terms of where the Bollinger Band is. In the dollar index, this is yesterday's action. So coming into yesterday, you had the higher lows, higher highs. The resistance is the 18-day average, the closest average, and you're overbought. You might reach higher than that, I don't know. What's the number you don't want to take out? Because on charts, before you place a trade, you should know what would go wrong for it. I don't want to see this 97.02 level taken out, which it did yesterday. That puts into play in an overbought market the likelihood, that's all it is, doesn't mean it has to do it. You can get back over this number, how do I know? But I'm gambling then in my head that the market's going to try to get to the 18-day average to figure out what to do from there. And that's pretty much what the market did today. What about the Eurocurrency? Where's the resistance? Well, you can see it, the 18-day average. This is Tuesday. This is yesterday. The market settled literally right on that 18-day average. I wish it would have been over it, but it wasn't. It pulled back a bit today, but it would have to take out 111.46.5 to break the pattern of the higher lows, higher highs. It found support back at the 100-day average to get the trend moving to the upside with bias. You've got to close over 111.92.5 roughly. So we're back to that number. British pound, oversold, rallied back to the 18-day average in a downtrend. Now, if you get rid of this number, which you haven't done, any number that's under 30 means I'm oversold. That's my interpretation. I don't think the pros are sellers up here. I think it's still oversold, but I do think the trend is down, the bias is down, momentum oversold. In the Japanese yen, will the market embed, or is it going to fail to try to get again to the lower Bollinger Band? It's already hit its downside target. The first challenge of the Bollinger Band is where I think the pros take money off the table, especially in an oversold market. So you bounced yesterday, you came down today. What would negate the downtrend that's at work? Taking out the highs of Wednesday, right through here. That high was 91.38. If the market breaks from here, what's the next target? 90.86. We're oversold, not embedded yet. Bitcoin. Fighting at what number? The upper Bollinger Band. But I've told you about halving. I'm not going to keep mentioning it. You do realize for the year, this market's gone from roughly the low of 6,700 to 89. So it's probably one of the leaders of the year in making the most gain. That doesn't mean I believe in it any more or any less. And yes, I'm aware there's ATMs that use this, and I'm aware that more stores than not are starting to come online. I don't see them dropping it, is what I'm saying. Some are adding. Okay, get it to the point where it's mainstay, and I'll be interested. In Brent versus WTI crude, still an uptrend. Got up to 620 difference, backing off a little, but you're keeping the premium that in case something goes wrong with Iran, that WTI is the more stable of the two oils. In other words, supply chain's not broken there. What about the Brent? Well, it's been in a downtrend. To negate that trend, you have to take out this high right here, which is 65.66. The downside target, and this is this past Monday, the 13th, 63.62. You're not able to quite get there. You're staying oversold, and you're just sort of playing right here now. You can still get to that number. The trend is down. The question is, I think, between 63 and 61. The 100-day average is where the major support lies. Maybe it's back in this area. You've already hit your downside target in WTI. You got down to it back here, and you're bouncing off of that. Now, if you embed these readings, I'll get bearish again, lose the embedded reading, and I'll look for the 18-day average. So I'm still very much in an oversold condition, waiting to see the next leg. Gasoline. Gasoline seems to be trying to find its footing right through here. Now, what about embedding? Both numbers today were under 20. Not so yesterday. I've just got an oversold market, so I think I'm on the right path. Remember, my gasoline report is still up for you to see. It probably comes off either Friday or Monday. I don't know which day yet. I don't take it off. We've got it automated. It's only up 5 business days, and then it's gone. And I think you'll see a story that I've been unfolding for you. And all of this action right now seems to be fitting in with it, so we'll see what happens there. But oversold, trending, nope. Higher high, lower low, just sort of hanging there. In the nat gas, you hit the lower Bollinger Band. I look for a bounce from that. Oversold condition, new lows for the whole move. And you know, I've been pretty adamant here that I just see so much natural gas on the market, it's hard for me to imagine a condition other than a storm, a really cold storm, to give it a temporary rally. So you put it all together, you get that game plan behind you, and again, I'm going to repeat it. My market research. If you want to see what I do and where the meat is, it's in my morning subscriber video for the futures. I record between 5:30 a.m. and 6 a.m. Central Time. It's posted ideally in a perfect world, and I'm there most of the time before 7 a.m. Central Time. And after the markets finish in the stock market, which closes 3 o'clock, I start recording 3:15, 3:20, my Spider ETF video, and it's out typically before 4 p.m. None of you, other than my paid subscribers, have had the opportunity to see the Spider ETF. Go to our website. You'll see under the free offers, we've even listed it there. Click off. We'll be certain to get it in your hands. I'd like you to look at it. Remember, I'm taking out of these different videos at the end of the day, all next week. It's going to come out. All of these Spider ETFs that I talk about, and I'll have their own videos for those. I'm Ira Epstein.